Folks, it is a Thursday, so let's do the thing that we do every Thursday, the individual we enjoy having on. That is going to be Tim Ord of the Ord Oracle. That's ord-oracle.com if you want to check him out. We have Tim on every Tuesday and Thursday. We greatly appreciate his analysis. Of course, he was seeing quite a strong pullback in the SPY, and we've hit that region. I'm going to wager today that we're going to see the SPY hitting the lower Bollinger Band, which in some cases can absolutely indicate a at least counter trend bounce, right? This movement is really what Tim and I have been speaking about on Tuesday. I think we have light volume today. I can see a counter trend bounce as well. Now, what we discussed on Tuesday is it depends on how strong that counter trend bounce is going to be. If you get some nice movement to the upside from here on some significant volume, then we're talking about potentially a trend reversal, but we're going to let the man speak himself. Tim, how are you doing?
Good. Yeah, there's lots. We're at the point right now where either we break down, which I don't think we're doing, or we reverse, in this vicinity. Most of these trades, if you're late in this week, usually comes on Friday. So what I'm saying is, more of the same maybe tomorrow, but in this vicinity.
Right.
But let's look at the bigger picture. The first chart is the top window is the McClellan oscillator. These are bigger signals, and anyhow, basically when the McClellan oscillator gets down below minus 300, which it did back on December 20th, or actually I could probably get my felt pin going here, but anyhow, right there, December 20th, 2024, which is a couple of months ago, we did get below minus 300. That within 30 days, you have to get above 200 or plus 200, go from minus 300 to plus 200 within 30 days. Well, it's actually 30 days, 1 day, because up here, on January 21st, 2025, we get to plus 200. And we did this pretty much, if you look where we are right now, actually, let me get my arrow here going. Arrow, which is right here.
Yep.
We're pretty much in the same vicinity as McClellan oscillator triggered the minus 300 to plus 200. And those things only show up on the bottoms. Back in October 2023, we had one, or it'd be October 2022, we had one, or it looks like about April of 2023, we had one, and they were all coming to lows. Before that, it was the COVID crash triggered one, so now we got one again. So intermediate, this is kind of an intermediate term. It doesn't say when they usually occur, they at least flip the market sideways. So I'm thinking at minimum we're going to go sideways here. So anyhow, that's that. So let's go to another indicator, which is the WAG breast thrust indicator. On Tuesday of this week, we did get down below 0.42 or actually got to 0.41. Ideally, you'd like to see at 0.4, but we had one back in started December and ran to January, and I went from 0.41 to 0.61. Took 6 days. Normally, the requirement is at least 10 days or less. So there's a WAG breast thrust indicator that pretty much triggered where we are right now. We're back actually at the bottom of January. We're testing that low right now. According to the Bragg's West indicator, once you get one, that becomes a support area. So either this indicator fails or it supports this area. So there's another indicator saying most likely we're probably at some low. We'll go on to the next one. This is more short term. The bottom window is the VIX, the weekly VIX. Next window up is the weekly SPX VIX ratio, and the next window up is the weekly SPX. If you look over here, we're pretty much touch. This is on the weekly time frame. and you're running into the lower Bollinger Band. When I did this earlier, we're actually back down right smack on it right now. Last time we were there, it came in basically 2023 back in here. That was actually low before the intermittent term decline happens. But the weeklies rule the dailies. Whoops, already a break. All right.
I know, Tim, I spoke too long in the beginning. Tim, please stay right there. Folks, we'll be right back with Tim Ord right after the break. Welcome back, everybody. This is Jacob Schuper. You're joined right now by Tim Ord of the Ord Oracle. We're looking at the SPY VIX. I want to say, if you go over to TFNN.com, you go to the services tab, we have the 6 secret ratios every trader should know. That's going to go over the SPY VIX. That's the weekly, daily, the TLT VIX, the daily VVIX and VIX. Guys, check it out. Tim, what are we looking at here?
All right. The bottom window is the VIX. And if you notice, we're running into the upper Bollinger Band.
Yep.
And the next one higher is the SPX VIX ratio. We're also running the Bollinger Band. You can kind of see it on a exploded chart over here on the when you blow up the window. And I noticed here on the weekly SPX, we did run into the lower Bollinger Band. So there's a lot of support in this vicinity. So let's go on to the next chart. This is the SPX tilt ratio. Actually, it started to get below RSI, below 30. Anyhow, the SPX, it's the bond market against the equity market.
Yep.
When one gets out of whack, goes too far compared to what the other one's doing, the RSI will rise above 70, which is the top, or the RS goes below 30, which is the bottom. And actually, we did start getting signals actually last week, and the market still has pushed lower. So it's a little bit unusual, but we're still in the vicinity of the 30 area. Actually, we're 35 right now. But I don't know why this market's kind of getting stretched. Could be a reason here, but I thought this was interesting here. If you look over in this part, explosion area, the SPX tilt ratio has actually been going up, with the market actually going sideways. That's a bullish divergence, so that's kind of unusual. So don't think we're out of the woods yet.
Sure.
But now this is a chart that we want to cover. This is actually today. We actually got lower. Let me do a pin one here. We actually did. Where's my? Okay, there it is. But we actually got down lower today, below the previous low. We hit a lower low. If you look at the volume, so you're comparing volume right now is approximately coming in about in this vicinity right here. We'll probably get higher than yesterday, but not higher than the day before, which is this one right here. So we're breaking this low right, the previous low of 2 days ago, and that's when you key off of, not yesterday's volume, but the previous day's volume. So today's volume would have to be equal or higher than the 2 days ago. If it doesn't, it's a test of previous low. And a lot of people are comparing the volume back over here, which is this day. Oh, there's some truth to that. You actually like to see 2 days ago volume be lighter than it was compared to back in that would be January, early January. So you're not breaking out to the downside. You went below it and you closed above it. Now today you went below it, and if you close above it and it's going to be in a lighter volume, you're probably starting to it's probably developing a short-term low. So I'm still thinking this whole area, I'm actually long back on this day right here. And it kind of kept me long because I got a couple of trend readings, a couple of tick readings that kind of kept me in this trade. So now I thought we'd go down to the lows and test them. And we're trying to break through the January lows. And I don't think at the moment we're going to do that. And tomorrow is going to be the key, because if it's going to happen, it's usually all these trades, the best days to trade are Tuesday and Fridays. And so if Tuesday works out, the next logical trade will be on Fridays. So Fridays, so they make you sweat over the weekend. if you get into a trade where you're going to be right or wrong, because Monday they won't let you in. Either you're right or wrong. So anyhow, so I'm kind of watching all that. But if you notice again, as we're talking here, we got almost the open and close below the Bollinger Bands again. The last time we had that came on Tuesday of this week. We had an open and close below the lower Bollinger Band, and we're kind of doing that same thing again today. I circled other times in red here. There's one back here. Actually, let me get a highlighter here. There's one back here. This is another time you close below the Bollinger Band. This is another time close below the Bollinger Band. And here we did it 2 days ago, and we're kind of doing it right now, even though this chart's a few hours old. If you look at real time, we're actually below the Bollinger Band. So we're below the Bollinger Band at a support area, which is the previous lows back in January. So either, according to the other indicators I've had showed up to this point, this area holds, or all those indicators fail. So we'll see what happens come tomorrow. And tomorrow could be actually a dead day. It doesn't really give you the confirmation that you made a bottom or you made a top. But in my opinion, it'll probably be kind of just a worthless day, so we'll have to wait till Monday. But seasonality is actually still bullish. Market does not like uncertainty,
right?
And Trump right now is giving a lot of uncertainty in the market. So we'll see how this rally goes. What I'm thinking is going to happen here is we're probably going to rally back up to this high up here, somewhere around 600.
I see.
That depends how the volume goes on that rally. If the advanced climb's really strong and we attack the old highs, then that would help immensely on the bigger trend. But there's some big volume days up in this range up in here, so I'm thinking this is going to be a resistance area, pretty much where I got long at. And if we hit that area on higher volume compared to when it's going down, then I'll change my whole view, and then we break out to the upside. So, but the first test comes in around that 600 level, and what happens there is going to be important.
Okay.
So,
yeah.
So we can move on.
Yeah, we have about let's say 30 seconds left for gold, but please come to the next segment as well.
Okay. But anyhow, this is a volume deal. There's another concerning deal here. Just if you notice, this volume going down is actually pretty increasing. So depends on the next rally. If we got volume pretty much equal this going up, that would be bullish. If we don't, that would be bearish. Yeah. So are we making a worthwhile top? I don't think so. I think we're actually going to more or less flip sideways and build more cause here for a while.
Fantastic. Well, Tim, please stay right there, folks. We'll be right back with Tim Ord after the break. Welcome back, everybody. We are joined right now by Tim Ord of the Ord Oracle. Tim, it looks like we're about to crack into some gold.
Yep. Seen this chart before. Just as a reminder, the bigger trend's up. This is a monthly bottom window is a monthly GDX up down volume cumulative with the Bollinger Band on it. Next window up is a monthly GDX advanced decline cumulative with the Bollinger Band up. Along these two indicators stay above the mid Bollinger Band, the uptrend's intact. This type of indicators usually signals last anywhere from a year and a half all the way up to 3 years. So we got triggered last May or March, I forgot what it was, but anyhow, it's on a buy signal. Both indicators are holding well above their mid Bollinger Band, so bigger trends up. So let's see what's going on short term here. Yeah, okay. I kind of flipped over to the momentum type indicators right now, because I'm thinking we're going to have GDX start to actually just trend.
Okay. And
not for sure, it could just bounce around still, but I'm thinking we're going into a trending stage. Now, trending stage, if you look back in, actually, let me change that color. Let's see, highlight. Whoops. Give me one moment here.
No problem at all.
Yeah, if you hope that's not too dark, but if you notice back in 2019, we got above zero. Mm-hmm. So anyhow, the bottom window is the 50-day average of the up-down volume. And as long as it stays above zero, the uptrend in GDX is ongoing. So I labeled all those blue or actually light green areas times when this indicator is above zero. And last time we had that was 2024. If you notice, we just stayed above 10 or stayed above zero. And I think that's what's going to happen here. We're going to actually stay above zero going forward. So I'm thinking this could be a trending market. Right now we're coming in about plus 14. Let me get an arrow here. Still getting used to this. That's invisible. If you notice right now we're at the 50-day average plus 14.32. So I'm thinking we're going to stay above in this region and actually trend. And these markets can trend for months. Back in 2019, and part of 2020, we stayed above that zero line more or less 16 months in a row. In 2024, we got above the zero line, looks like about April, stayed all the way there, it looks like about November. And the market kind of chopped up, but it trended up. And I'm thinking this is what's going to happen here. The reason why, if you go to the top window, I got a dotted red line there noting the previous highs of 2020. Then we had one in 2024. We're up against that trend line right now. And we're probably going to see a surge here, kind of a dramatic surge through that line, because that's normally when you break a trend line, you have to have a sign of strength. If you break down below a trend line, you have to have a sign of weakness. And since we're going up, we have to have a sign of strength. And this trend line goes back to 2020. That's 4 years ago. That's a long time ago for a trend line. So the more time a trend line remains in existence, the stronger that move becomes to get through it. That's the reason why I'm saying it could be a kind of explosive move through that 43 area. And I bet we bust through that area and really show a sign of, we'll have to show a sign of strength. If we don't show a sign of strength, that would not bode well for the market. So I'm thinking that's what's in front of us. And it could be really a trending market where they don't actually let you in. So we did have a decent pullback in late last year, and that's probably the best chance you're going to get to buy going forward, probably for the next year and a half, because I don't think we're going to see back down at 34 again, in my opinion. Years probably, because once you break above 43, then that opens the door for a huge trend to the upside. So it's going to be, my opinion, at least multi-month, if not multi-year rally. And so I think we're going to trend. So that's one trending market. This is a 50-day average. So I'm thinking we're going to start trending. There's a short-term one I also use. I use an 18-day average of this is a GDX up-down volume, 18-day average. Next one higher is the 18-day average of the advanced decline. And they pick out the shorter-term trends. They don't try to catch every wiggle, but it kind of gives you a warning that you might have a consolidation. Right now, when I did this earlier today, we're at plus 12 on almost plus 13 on the advanced decline one, and almost 12 on the other one. And we're kind of trending up. So the uptrend's intact. It doesn't try to catch all the wiggles. It just tries to catch the main trends. So we got this one saying a 50-day average. So this is 50-day average is actually, a 60-day average is basically 3 months, 20 days of trading every month. So a 50-day average is like a 3-month average, or close to it, about 2.5 month average. So it's a big average. So once it moves in a direction, it can stay there for a while. And this is an 18-day average, which is basically, over 3 weeks or so. So, but both of them are up. The uptrend's intact. Don't see any major divergences. So I'm thinking we're going to start approaching this previous high, and I think the market actually may speed up. So we'll see. If you go back to, actually I don't have advanced decline. If you notice, well, advanced decline is almost setting at a new high, which is this indicator right here. But I'm thinking we're probably going to move up to here. So anyhow, advanced decline is probably, of all the things going on, the advanced decline is kind of leading the way for GDX. So most of these gold stocks that have been sitting dormant and not moving much are probably going to start picking up.
So I mean, are there any, you know, we've been seeing with some of the gold miner equities, some of them are doing quite well, and other ones seem like they're having, you know, kind of like regional issues with them, right? Are there certain, I know we're looking at the GDX, which is kind of like the, you know, almost like a composite of a lot of the miners, right? But are there like certain regions you're seeing that you think will be stronger than some of the other miners, you know, whether that's due to, you know, currency-related issues or, you know, national issues these countries might have, or are you liking the GDX in and of itself?
I like GDX in itself, but I look at the monthly charts and a lot of these. Actually, I was going to bring a one and just show you what type of things I look at to determine what stocks are good and which ones are not. And I'll remember, if I can remember, I'll bring that next Tuesday.
Yeah, I can email you too.
Yeah, and I forgot all about it, but I start off with the monthlies and make sure those monthlies are the ones, because the monthlies rule the weeklies and all the way down. So if you got a monthly working that's turned bullish, then you want to own it. And so I'll show you that technique next Tuesday.
Fantastic. We're looking forward to it, Tim. Tim, thank you so much for joining us. We'll see you Tuesday.
All right. Thank you.
Take care, Tim.